traders, and welcome to another episode of the Coach's Playbook. We got a great episode for you today. If you notice anything different, I went out and got a neutral colored top so we're not obscuring the names at the bottom of the screen. That was really annoying. That's something that I took to heart. Today we're discussing a real timely topic, which is 3 things you should be looking at when trading unemployment, which of course is coming out this Friday, bright and early, as it does every first Friday of the month. But before we get into that, Dan, I understand that you have a couple of trader shout-outs today?
I do.
Who's making the money?
All right, so I got a couple traders here today that I wanted to mention. First off, let's give a shout out to James from Florida yesterday. He took out $1,000. That's pretty great. Any day that you can turn over 4 figures, you add those up over 200 trading days a year, you're sitting pretty.
Absolutely.
So congratulations to him on that number. And then on Monday's always tough days to trade in general. Monday, Skylar M. from Texas made $1,300.
That's a solid Monday. It's a good way to start the week.
It's not a bad way.
And he's from Texas. They don't do anything small in Texas.
Right?
Keep it big.
Absolutely.
All right, so we're going to dive right into it here. And our first point of the 3 things you should be looking at when trading unemployment is you should, of course, know the fundamentals. I mean, that just applies to anything you're trading, anything you're doing. Know the fundamentals before you start.
Absolutely. We'll just kind of start here. In theory, if all numbers look good, meaning non-farm payroll is a good number, unemployment goes lower, we have this concept of unemployment down, market up.
Right.
Fundamentally, that's what's supposed to happen. And I think it's really, really important to always keep that in mind.
Yeah, absolutely. I mean, the U.S. consumer is the main driver of the U.S. economy, and more people working, better economy, right? One would make that assumption.
And I think it kind of goes back to, you can talk about the Tuesday rule. On Tuesday night, if you go out to dinner, how is the restaurant packed? If the restaurant is packed, do you think numbers are going to be good because people are out spending money?
Yeah, I never heard that before. That's good.
I think it's something you have to keep in mind no matter what anyone says. If people are out spending money, it's a holiday season too. So especially if you go out to dinner tonight, people are saving up for the holidays because they're spending all the money on travel and gifts and that whole 9 yards. If the restaurants are crowded on December 4th, that's a good sign.
And I do like that because, you know, the shopping at Christmas is so largely online now, but you're not going to go out to dinner online. So
No.
it seems to be a good pulse for how the economy's doing is how the restaurants are doing on Tuesdays.
I always think that's the thing I got to keep an eye on.
And good afternoon to you too, Norman. One of the things about unemployment is it makes a lot of sense intuitively, but there are a lot of layers to it, right? As you were mentioning earlier with the fundamentals that, you know, low unemployment, you think equity should rally, the economy is good, but there's a lot more to it than just that headline, how many jobs were added, and more than the rate too. One thing that I really like to look at is the labor force participation rate, especially nowadays, you know, where only, I believe, off the top of my head, maybe 60% or somewhere around there is what that's at. And so like we have super high employment right now, but you have to measure that against what's happening in the labor force participation rate.
Right.
Absolutely.
So it's like an onion. There's lots of layers to it.
Right. And when you look up the number, unemployment, here's a prime example. If you're standing on the floor, you have unemployment up top and then you have non-farm payrolls. Those are the 2 numbers that they post. Instinctively, those are the first 2 things you look at, but if you were to dive in, let's say you go to a website that pulls all those numbers, there's about 12 different numbers that are coming out that people are looking at, and I think that kind of segues, I'm going to take your job here, segues really nicely into that next part.
Yeah, I'm to leave. I'm going to go get a sandwich. We already have lunch here, and and now I'm getting my job taken.
But it jumps into the second point that we were talking about, expectation versus reality. Unemployment, just because, let's just say, tomorrow on Friday, unemployment posts a number of 3.2%. Pretty darn good number.
Right.
Yeah.
Yeah, and if that's expected, then traders, it's not always just about the fundamentals, it's about the positioning of the actual participants in the marketplace. If traders are assuming that that is going to be the number, they're going to be positioned to profit from that, or at the very least to hedge their positions against something different. So you have this idea that the number is going to come out good, equities are going to rally on the number, so everybody's already long, and then you get the buy the rumor, sell the news effect. If everybody is already in, there's nobody left to continue the move to the upside or the move to the downside in whichever case it is. So a lot of people ask me, ask Dan, ask everybody, why, when a number comes out good, does the market not respond in that direction? It goes the other way. And so there's that kind of a smaller inner layer of the onion that says, if everybody's already positioned one way, who's left to perpetuate the price in that direction?
Right, and speaking of the onion, we talked about how there's 12 numbers or something like that too. Those are 12 numbers that people can be looking at and have differing opinions of what's good or bad.
Absolutely.
It's not just the top line. And speaking of questions that are asked, Murat asked, is it just important that the economic numbers are above or below previous numbers, or are there thresholds which are important above X, below Y?
That is a spectacular
That's a really good question.
Murat always has good questions.
Yeah, he
for
does.
Yeah, that's wise. My thought would be that the markets are just the ultimate discounting machine of things, which this goes into some of our expectation versus reality. So I don't think on its face it necessarily matters that a number is above or below what it was before, because that should already be priced into the market going into it.
Something I think that's worth keeping in mind is a lot of these numbers, there are certain times of the year where you're going to see higher numbers versus lower numbers. Unemployment rate, you always just want to see that better than the last one. If it's lower than the last one, that's good. That's kind of the
same.
Or at least the same. That's kind of the one that you can keep an eye on. But payrolls, things of that nature, keeping an eye on those numbers, labor force participation, jobless claims, things like that, they're going to ebb and flow. And they're always, just because one last month was really good doesn't mean that this month has to match the last one. It's versus looking at what are markets and what are the analysts expecting, and how does that number come out against the expectation?
Just what they'll be expecting us to do. No, and another layer to that onion, revisions.
We had one today. We had it this morning. Jobless claims revised from 150 to 68,000.
Right.
Revisions are not sexy, but they will make or break everything. Those
They certainly can.
Everybody eventually goes back and looks at that revised number, So that is what's ultimately sort of your gauge for things.
Yeah.
So,
And then all of that information comes out, and everybody has to digest that information instantaneously. It takes time. It takes time.
What part of economics would be sexy?
Making money part?
Having a lot of money.
Having a lot of money.
Having a good,
Labor game theory, something like that.
Right.
Definitely not this.
One last thing I wanted to touch on, expectation versus reality, something that I think is really important, and I think it carries not only just with unemployment number, but all of this stuff carries over with any economic release. But when a number comes out, like John was saying, when there's a lot of participants already in that market, there is an expectation that this number is going to be better, and then where are the buyers? They're not there. Well, one thing that I think is so important, and it was something taught to me a long time ago, was trade the reaction, not the emotion. So that first initial emotional move, you don't want to be a part of that. You're going to get eaten up. You're going to get stopped out. You're going to lose money. You might get lucky once or twice, but
You might.
You might. But it's a matter of waiting for people to start to actually react and have digested those numbers. And that's when you see the participants start to come in. And that's when that market goes, oh, now we're going up.
Yeah.
It's not right away. It's a quick. It's fast.
I've found, and probably many of you have heard me say this already, I've taken some positions into some major economic releases.
Yeah, you saw the cross come out there.
And I've had some really successful days, and I've had some really horrible days. And if I add up the P&L of the good and the bad, I'm about even. So, it seems like carrying that position in is difficult to put together any sort of consistent strategy, but responding to what happens, you may be able to get a little bit more consistency.
Yeah,
Absolutely.
and just a last thought on that as well is just know the consensus, know the range, know the whisper number, and especially be prepared of how you're going to react if it's outside at the either side and what you think it's going to do then.
Absolutely.
One thing's for sure is it usually does offer opportunity.
Sure.
But greater risk.
Yeah.
Much greater risk, and I think as an outright trader, it's a very The risk does never outweighs the reward in these situations.
All right.
I don't know. Yeah, money's always a good answer. Sorry, I was reading the comment over here from Daniel T. Hey guys, sneaking a bit of screen time on my lunch hour. Money is always a good answer. Yeah, money is always a great answer. Like
Money in the pocket sometimes better than money in the markets.
So one last thing we're going to discuss here, we're going to get a little philosophical with the unemployment number. Put on your philosopher hats. The philosopher trader king over here, John Hoagland.
I don't have my hat.
What is a job anymore? Because that's something that, just to give a little preview for the people out there watching, one of the reasons I think the unemployment rate is so low right now is that pretty much anyone who is not a complete menace to society or can get a driving, nothing against driving Uber or anything else, but if you want a job, there are these on-demand ways to be technically employed. But the question is, does that count as a job? And is the unemployment rate any longer a good way to measure what we're trying to measure with it?
I think it's a spectacular point to bring up, and I think there's a lot to digest within that. Anywhere now, if you are, whether you're out of a job, if you're determined to make money or you need to make money, you've got bills to pay, we all do. If you're out of a job, I can go through my phone right now and find about 30 different apps that if I was out of work, I can go sign up on that app and I can start generating some sort of income.
You can generate income on Uber on your way to work.
You can generate income just by using an app called Toro to rent your car out. I can rent my car out and make money, and that's a job, and I'm not doing anything to do it.
And once again, this is brought to you by Uber and Toro.
Right. But there's food delivery. There's ride sharing. There's
what's the one where you there's Handy. There's the things where you go and go help people.
TaskRabbit.
That's what I was thinking about.
For
dog
freelancing, dog walking, Wags. There's
Rover.
always something out there. There's always something out there for you to do.
Yeah, you want to make some money, you can trade futures. You want to make big money, you got to make one of those apps, I guess.
Yeah.
Well,
there you go.
Making those apps is employment.
Absolutely.
That is true.
That's exactly what it is.
Well, I guess we'll leave it there for now. Dan, did you want to inspire us with a piece of wisdom?
I do. I have a quote from a professional trader, Jamin Shah. And I think this one is great. It goes with what we talked about here today. Don't blindly follow someone. Follow the market and try to hear what it is telling you. I don't think there's much more to say. I don't think we have to elaborate on that.
Yeah.
Well, I think with that, then, we'll go get ourselves some focaccia sandwiches out there that are waiting.
Outstanding.
That's all for this week's Coach's Playbook. We'll be back this week, hopefully with Mick. He had a very important meeting today. But in the meantime, guys, have a wonderful week. Have a wonderful weekend if we don't see you till then, and trade well.
Trade well, everyone.
Take care.